I'm not going to introduce our panelists, but we have a great combination between a regulator, a lawyer, a crown corporation, and a large financial institution with exposure both in Canada and in the US. And the goal of our discussion now is very much around how do we maintain momentum in this environment. Now that there's a lot of uncertainty in the global reality when it comes to sustainability, how are we maintaining momentum, both in the short, medium, and long term? So I'm going to start with you, Michael. It's going to be great if you can introduce yourself and your role at BMO. And at the same time, tell us how the current political and economic volatility has impacted some of your approach or strategy for BMO in the last year.
Right. Well, thank you, and thank you for having me here. It's a great session already today, and look forward to this panel. So my name is Michael Torrance. I'm Chief Sustainability Officer at BMO. I oversee the bank's corporate sustainability program. And when I think about this topic, it's definitely the topic du jour. There's all this political change. There's new and emerging legal risks. How do we think about this as sustainability professionals? And I think it's important to go back to first principles. What is sustainability, really? I think of sustainability as a methodology and not as a prescribed outcome. It's really a management approach for understanding the complexity of business, where you have many, many different stakeholders that have legitimate expectations on the company. And a company, to be legitimate, to be able to succeed, to be able to profit, has to be able to navigate these complex expectations. And so what sustainability does is it gives you an approach to doing that, which starts with a materiality assessment of who are your relevant stakeholders, what are their expectations of the company, how would we think about applying that in a management approach. And if you think about it that way, then it's actually a very versatile concept. And it's also dependent on actually the changing perceptions of stakeholders over time. And when it comes to looking at the normative expectations of stakeholders, you also have to think about the legal and regulatory environment, because in terms of, not to get too obscure, but like the hierarchy of norms and expectations, if the law tells you you must do something, then you must do it. And if the law says you shouldn't do something, you can't do it. So you have to take all of this into account and then determine what is the right path forward in terms of how you manage your impacts as a business. So again, when you think about it that way, the short-term fluctuations of political perceptions or even regulatory changes, they're important, they're relevant, you consider it, and you ingest it into understanding the complex environment in which you operate, and you develop a management strategy going forward. If we kind of pivot it to sustainable finance and climate and the topics that we're talking about today, really, we see actually a remarkable amount of resilience to the importance of these topics in business. When I was at New York Climate Week, one of the things that stood out to me was the fact that the macro shifts that we have all talked about over the last number of years are still very real. There was some articles that came out of Climate Week saying ESG used to be environment, social, and governance. Maybe now it's energy, security, and geopolitics. I think it's kind of an interesting, shift that actually fundamentally doesn't change anything. There's huge demand for energy. There's a rapid pace of change in terms of the bringing on of renewables. There's what we heard from the other panel, insurance risks can be growing, physical climate impacts are becoming better understood. So when it comes to the relevance of climate for business, I think the case is still very clear. And then again, as a manager, which is the perspective that I take, you have to think about how does your business have an opportunity related to this? So what kind of businesses should we be developing and evolving over time to relate to these new phenomena? And how do you manage risk? Because as these changes happen, the context in which you operate will change over time, and so you have to be alert to these things. And that's actually precisely what our stakeholders are expecting us to do, is to, again, pursue new opportunities and be aware of that, and then to manage risks effectively. So fundamentally, I don't think it's changed all that much.
Thank you. Really good to hear from you, Michael, in that perspective that it still remains a risk that you need to manage and an opportunity you want to take advantage of, right? Thank you. Then I'll go to you, Stefan. I want to hear, I wanted to surprise you and go to the regulatory side of things. And one, I think it's going to be beneficial for everyone here to hear about your role and how it has changed in the last, if it has changed in the last year, and know that your team has a new name.
Yeah, absolutely.
And then how, what you see in the US, what you see across the globe, how that has helped to either inform or shift the priorities at OSFI.
Yes, thank you. Good morning, bonjour. I was watching the clock ticking, and I thought, keep on going, Michael. I might just get out of here without without having to say anything. But it's a really thank you so much for inviting me. It's a pleasure to be here for. I think this is the second year in a row for us. For those of you who don't know me, Stéphane Tardif, managing director of what we used to call the Climate Risk Division at OSFI. So OSFI is the federal prudential regulator. And one of the ways that we've been managing this geopolitical shifts that we're talking about today is really trying to find ways to insulate ourselves from all that pressure. A couple things we've done is we've done a very simple rebranding. So we're now the Catastrophic Risk Division. We've decided to take the climate target off of our back, but in all fairness, it's hard. Physical catastrophic risks, weather-related physical catastrophic risks, are politically agnostic, right? We see the evidence. Kevin was speaking about some of the events in the U.S. We've had a lot of events here in Canada, and I think doubling down on physical risk measurement capability has been really critical for us this year. And it's been the focus of our reviews with our institutions. The other thing that we've done is, some of you might remember at OSFI, we brought in climate risk as a transverse risk across our risk assessment framework. So when we were assessing institutions, we looked at climate from a business risk perspective, financial risk perspective, governance, and operational risks. So we would look at all these four pillars. And what we've done this year, and I think it's either been announced or will be announced in a few weeks, is we're looking at climate strictly from a financial resilience perspective. So going back to the comments that Kevin made in his opening panel, this really is about embedding climate in expecting institutions to embed climate in their own enterprise risk management frameworks, risk appetites, statements, et cetera, and it's about financial resilience. So we've really narrowed our focus on financial resilience and physical cat risk. Now we're still doing a lot of work on the transition risk side, but just less visibly, less publicly. And I think these, some of the actions we've taken this year is hopefully going to help us weather some of those political shocks. And continue to advance this discipline, which, in my opinion, is still relatively nascent within our financial institutions. And happy to talk about that in some of the other questions coming up. Thank you.
Exactly. We'll dive deep into the, resiliency side. It sounds like from, Kevin's conversation, from what Stéphane is sharing with us, this is becoming now, or it has always been, right, from a regulatory point of view, like the goal is to ensure we have financial stability and we ensure that the frameworks that we put out there just enable financial institutions to achieve, a resiliency. We'll come back to that, Stéphane. Bill, do you want to go ahead and share a bit more about your role and how, your priorities have potentially changed or not in the past year with the current geopolitical environment?
Yeah, sure. Thanks, Katerina, and I really appreciate the chance to be here in this room at this great event. So I'm Bill Gilliland. I lead Dentons Canada's ESG practice. My role is really around advising clients on their disclosure, helping them comply with their legal requirements around sustainability and climate disclosure, but also helping them tell their story in that space. And so when we talk about geopolitical risk, and when we think about that, what we've really distilled that down to in our practice and what our clients are interested in hearing about is changes in U.S. federal government policy in this space. We used to be in a world where clients would love to talk about the latest, employee resource group that they would establish, or talk about a small project in their organization and the climate impact of making those investments. Now we're in a world where talking more about all these kinds of things is not necessarily a good thing for those companies, particularly when they do business and interact with in the U.S. or interact with U.S. federal regulators. So at the same time, clients want to tell their story. In Canada, we have a lot of mandatory disclosure requirements across the sustainability space. And certainly in the finance space, banks and financial institutions are in the vanguard of the group of companies that need to start providing significant mandatory climate-related disclosure. But on top of that, in our view, stakeholders of companies and companies themselves are still very interested in pursuing all the same goals that they've had. They recognize the importance. And to that extent, we would echo the general consensus or general view out there that, companies are not changing what they're doing. They're just maybe talking about it in a different way. And so in that context, we're helping clients, and what companies are trying to figure out is how to really balance saying less, but still focusing what their story is on what their core business strategies and objectives are, so they can really tell their story, which again, we think they still consider to be very critical in this space.
Thank you, Bill. Amar, do you want to go next? It's going to be very interesting to hear from you, given your mandate at FCC, and see how you are approaching, and if something has changed in the past year, given the current geopolitical environment.
Thanks, Katerina, and thanks for inviting me. Glad to be here. I think agriculture is having a moment in a lot of conversations that we've been in recently. I'm Amar Ades. I'm the Senior Director for Sustainable Finance and Insights at FCC, the largest Crown Corp you've never heard of. We're in the second year of a strategy that embeds sustainability at the core of everything we do. And I think it's actually a really interesting time. So there's a silver lining to what's happening geopolitically and globally, in that you want to kill ESG, fine, right? That's just a framework for analysis, but sustainability is a whole different thing. So people talk a lot about ESG investing and how ESG is now passé and all that. It doesn't matter. ESG has always been simply a framework for analyzing risks, right? And as I was hearing, previous speakers on the panel and Kevin earlier, I was nodding and taking mental notes. I'm like, I wish I could address all these things, but I want to focus at FCC. And at the end of the day, it's all about materiality, right? I mean, that was referenced earlier. Michael mentioned that. And what is material will not change just because the political winds have changed, right? That's a fact. Climate change is not going anywhere. Agriculture is at the forefront of climate risks and opportunity in a very unique way. So when I joined FCC just under 2 years ago, I didn't know anything about agriculture. I like food, still like food, but never really thought of the complexity of the sector and how it's far more sophisticated and far more technologically advanced than most people realize. One of the most interesting things about my job is going on field visits. And you can look at southern Saskatchewan and Alberta, drought for the last 8, 9, 10 years, right? You don't need to talk about the cost for that. It is happening, right? So you can approach your customer, talk to the customer about how you can support them becoming more resilient by doing X, Y, Z, and investing in resilience, investing in more resilient seeds, investing in all kinds of things that can make them more sustainable without even mentioning the word sustainability, right? So for us, that was the interesting thing, is like, we're just essentially doubling down on what we're doing, because what we're doing is supporting the sector. It's not woke, it's not driven by any kind of political agenda. It is simply about making our customers more resilient, more productive, more efficient. Using fewer inputs in your production operation means you're going to cut costs, and you're also going to be more resilient to changing weather conditions and rain patterns and so on. And just looking at some of the innovations in agriculture, it's truly fascinating. Some of the technology, I'll give you a tangible example, right? So not tilling the land. For thousands of years, when humans figured out agriculture, we always tilled the land, right? So why do we till the land? Because we need to put the seed underground so that the birds don't come and eat it, and that it can grow, under a few inches of soil, right? You have technology now that can put the seed right underground without needing to turn over the land. Turning over the land and tilling it releases a lot of carbon and actually ultimately makes the soil far less resilient and gets dry much faster, right? So if you look at two fields that are next to each other, one has been tilled and one hasn't been, the one that has never been tilled or hasn't been tilled for years is far more healthy and resilient. And you can see that this has nothing to do with the word sustainability at all. You don't even need to mention that word, right? But it is a business imperative. So to conclude, what we've done is simply double down on making the business case for sustainability, and it is a very powerful business case for sustainability in agriculture.
I love what you shared, and actually, agriculture is one of my favorite sectors, not only because it's very important to the Canadian economy, it's going to grow, but because of the potential for lots of innovation, to your point, right? And if we go beyond, to your point, the regulatory, the political agenda, sustainability is all around what is material that we need to manage and how can we improve and innovate so that we can, introduce more efficiency going forward. So thank you very much for that. So we'll come back to, because I want us to discuss a bit more about innovation. But before that, I'll come back to you, Stefan, to talk a bit more about OSFI, and you have like a critical role, right, in overseeing climate risk for banks here in Canada and establishing, regulatory guidelines to ensure that financial institutions are able to embed within their risk management processes climate considerations. Given the current, global regulatory environment and political uncertainty, what do you think is OSFI's role to ensure that institutions maintain momentum when it comes to sustainability priorities? Or do you think there is a role there for OSFI?
Absolutely. I think, OSFI's mandate is legislated by Parliament. We have to be somewhat maintain some independence from geopolitical and both international and domestic events. But the mantra for our team is really to institutionalize these best practices around climate risk management and ensure that institutions are operationalizing them and embedding them within their frameworks, as I mentioned earlier. Because, and I just want to clarify one of the things that you said earlier about having lots of mandatory climate-related disclosures in Canada. I would say that a lot of the climate-related disclosures in Canada are not mandatory, right? Even our guidelines are, they're expectations. None of OSFI's guidelines are law. They're expectations of best practices. They're prudential expectations that we set out. We hope institutions will look at them and it'll help guide their practices, but they're not mandatory. The CSSB standards that came out are voluntary still. We're still waiting for the ecosystem to develop and to bring out some of that legislation and that law. And so I think we have an important role to fill that gap in the meantime. I didn't think that we would still be having this conversation 6-7 years later. It's really unfortunate that there's still a lot of room to grow. But I think if you had asked me 3-4 years ago whether OSFI would be the only regulator in North America to have adopted the IFRS S2 standard, I would have been shocked. We're the only regulator in Canada to have pointed to the CSSB sustainability standards. To me, that's shocking that we haven't, as a collective system, moved further ahead, right? There's a lot of political opportunism. And one thing that's really disappointed me in my journey in this field is how quickly institutions pivot and move away from these beautiful commitments. We never asked institutions to make net zero commitments. We never asked institutions to join the GFANZ network. We never asked institutions to disclose Scope 3. Institutions did that on their own for many years. And all we did was say, well, let's move towards this acceptable standard, this internationally acceptable standard. And all of a sudden, what would be a really interesting panel is for me to read to you the letters I get from the institutions advocating that we pull back on climate. And I really think that would be the worst thing for us to do in terms of preparing our financial system for resilience for decades to come. And so the last thing I'll say quickly, is that we published recently the results of a standardized stress test. So similar to Kevin and the Fed, we did a stress test, a scenario analysis exercise. We published the results in September. But instead of doing just the systemically important institutions, we did 250 institutions. We forced all of our institutions to do this exercise to build capacity, and it was shocking how much capacity needed to be built. Simple things like lat-long geocoding of assets, understanding where your exposures are. I mean, it was shocking. And when we wrote the report and we gave it to our reviewers, we started with the quantitative results, and then we finished with the lessons learned. And similar to what Kevin was saying earlier about the Fed exercise, the quantitative results were underwhelming, right? Our banks are well capitalized, they're big banks. So when you talk about $100 billion, over the next 20, 30 years, it doesn't really resonate. But what really resonated with our review committee was all the lessons learned. So they told us to move the lessons learned to the top of the report and focus on all the areas that the institutions need to build on over the next, decade. So I think OSFI has a really important role to play.
Yeah.
And I'll pause there.
Perfect. And I have, you mentioned two things, Stefan, that I want to follow back, and then I'll come to the rest of the
This is
panel.
what Jerry told us to do, by the way, in the prep,
Yes,
is that we have to
yes.
follow up on each other.
Yes.
So
So I'll start from your last point, and then I'll go to the previous one. So you were absolutely right that it was, a shock, for some of the, especially the medium to small size institutions to go through that exercise. But what was very interesting for us to see as advisors to the financial services was that some of the challenges that the small institutions faced were exactly the same as the challenges that the large bank face, because it goes back to what Kevin mentioned around data availability, around access to data, the geocoding. Of course, the large financial institutions, maybe they had potentially more budget or access to resources to ensure that they build around the exercise. But what was very interesting is that common challenges were common across the different sizes of organizations. So that's one I'm sure you've seen.
yeah, and the thing that concerns us as regulators is that it's the smaller institutions that are less geographically diversified. They're smaller, they're less well capitalized, and they're the ones that could be in more trouble if as events unfold in the decades to come. So
Perfect. The second thing that you mentioned, it was around the progress around climate-related disclosures, right? And that 6 years later, we're still talking about that topic. What I want to discuss with the panel now is the 2025 federal budget. In that budget, we do see a commitment from the government on sustainable finance taxonomy, as well as climate-related disclosures. And I want to get your opinion about how do you feel about that? Is it now the right time? Will it help to, drive the conversation forward? Or maybe what the UK has done, where they're saying, there is enough out there at the moment. We don't need a UK green taxonomy. So Mike, maybe I'll start with Mike, and then I'll come back to everyone.
Okay. Well, I don't have a strong view on it. I would say I think there's some logic to what the UK government has said in the sense that there is sustainable finance activity happening in the absence of a government-sponsored taxonomy in Canada. That being said, I could also see the utility of it. I was a part of the Sustainable Finance Action Council, and there was some really great work that was done on how to conceive of a taxonomy like that. I think it could certainly be helpful perhaps for government, especially if there is a large push towards greater investment in projects and infrastructure that could include consideration of green and social impact. So I think it could be beneficial. I think it is largely, though, sustainable finance is a market-driven phenomenon. Again, insofar as it's affecting investment by government, and government wants to set standards that it would follow for its own investment, certainly the market will look to that and will seek opportunities related to that.
Great, thank you. Amar, anything from your, especially given your focus on agriculture, will that Canadian, sustainable finance taxonomy help with your efforts?
I think we do need a transition taxonomy, and in particular because, I'll give you again another tangible example. We have a sustainable finance framework that covers a number of eligible activities that we are comfortable labeling as sustainable, and we got a second-party opinion on that. And the SPO has no choice but to benchmark us against the green loan principles, which are, as you know, European ICMA driven, and they're very binary, right? There's no room for any gray area or transition from brown to green. So naturally on these activities, we have a mandate to support the sector. We can't walk away from areas that are considered, excessively emissions intensive and so on. So we have to find solutions whereby we can mitigate some of those emissions, and there's a lot of technology and innovation that can help us do so. But those types of investments that would move us from point A to B on let's say, livestock or something that is emissions intensive in agriculture, there's nothing that we can benchmark against that says, oh yeah, this is sustainable, right? So we want something that would allow us to say, well, this is a transition activity that would actually take a currently brown, for lack of a better word, activity and move it incrementally towards more green, right? So in that context, I think we are different than the UK. UK is not a resource-driven economy. We are, right? Not just agriculture, fossil fuels, mining, and so on. So I think it is important for Canada to have a transition-driven taxonomy. And for us at FCC, we do have a well-founded, well-informed, science-driven sustainable finance framework that we think could contribute towards at least the basis of a transition taxonomy for that sector in Canada.
Great, thank you. Bill, anything you want to add to that? And also
Sure.
maybe from your legal background, just to share like a bit of perspectives when it comes to increase in legal risk and with the geopolitical environment and how the taxonomy and the federal budget will help.
Sure, I think it's all connected. I was involved in the original effort at the CSA group to come up with a made in Canada transition taxonomy, which ultimately succeeded in terms of generating a lot of thought that was then handed on to subsequent groups. But I think it's important. I think, and I just want to kind of tie everything together under the greenwashing umbrella, greenwashing and reputational risk. So I think given and the recognition that banks and lending institutions and larger companies in the Canadian economy that are in the process of transitioning are definitely big targets for greenwashing, and whether the greenwashing claim ever succeeds or not, becoming a target is a reputational issue that no one wants to really go through. I think what we've seen is that the green bond, green loan concept, the use of proceeds, and then the sustainability-linked types of financing instruments have been a challenge for the resource extraction industry, the pipeline industry, et cetera, those areas that need to transition to utilize. Because when they have been utilized, there's high-profile cases of those companies, but also the banks and the underwriters that have been involved in those deals being pursued for greenwashing claims or having shareholder proposals brought to shareholder meetings and so on. So there's been a hesitation, I think, to use those more traditional financing labels in the Canadian economy. I think the transition label should allow a little bit more cover because it provides a framework that contemplates moving from brown to ultimately green. So should provide more cover for more, I think, Canadian industry and Canadian businesses to actually participate in that space. So I think it's going to be really helpful from a legal risk perspective, to be honest, to have that tool available here. So.
Great. So what I've heard so far is that there is a focus on when it comes to making sure that the system is resilient, when it comes to long-term strategies, as long as we see some material topics, those remain part of our strategy. A lot of focus on innovation. I want to come back to that. And then from a regulatory point of view, ensuring that we are focusing on risk management, setting up the expectations for institutions and learning also from the market, which is something that you've done a lot of, like being very active, in the market, like Stefan, just to collect all the lessons learned and then share it back. If we focus now, because we only have like 10 minutes left, like very quickly, I want to focus on the innovation side, and I'll come to you, Mike and Amar. So, Mike, from your point of view, given the fact that sustainability is so core to your strategy, and we talk about the risk management side of it, what about the opportunity side? How are you thinking about your investments? Where are you focusing now to ensure that you capitalize on opportunities, both on the short, medium, but also the long term?
Yeah, innovation is a big part of the way we think about this topic, because it's, in terms of us thinking about the biggest impact we're going to make, it's going to be in how we work with our clients, particularly when it comes to climate. The real economy impact is where the effect will be found, and that's not going to happen necessarily with banks decarbonizing their own operations. It's going to be how our clients are going through that process or building resilience. So it's a long-term initiative. We're very invested in the topic, and really the investment is around building the capabilities to be able to provide insights, advice, and financial services for companies that want to advance their own climate strategies. And so some of the examples of the things we've done, we've established teams within our capital markets group, our commercial bank, with sustainable finance expertise. They can work with business partners, say equipment finance or real estate or investment banking teams to be able to deploy that capability, provide advisory services, provide structured products. If there's a market interest in responsible investment tools, we have a responsible investment team within our global asset management business. If they're interested in a sustainability-linked loan or issuing a green bond, we have that capability. And the market can shift, and this isn't like we're not foisting this on clients. If they're not interested in it and they're not seeking it, then we still have it on our menu of options, and it's something that we can discuss with. It's even a topic that we found clients have been interested in, just getting our views on the market. What are the strategic considerations they should have? We also have a very substantial business around carbon markets, and that's been a very big investment that we've made to be able to advise on the origination and trading of carbon credits. That market has been highly fluctuating, but over the long term, it's probably going to be a very important part of how the transition to a lower carbon economy happens. And so again, we've invested in that capability. We deployed climate training for our first line bankers in our commercial bank. So these are people who might have a specialty in financing farms or, again, equipment finance, but helping them to understand, well, if you're seeing clients that are wanting to invest in renewable natural gas, if you see clients that want to invest in solar panels, that might be an equipment finance, but you have to be able to have that conversation with them about what are your long-term plans. Maybe you'll surface new opportunities, and also to know that there's opportunities within the bank. And then from a thought leadership perspective, we established the BMO Climate Institute, which is a way for us to engage internally and externally on the topic of climate in a way that's really focused on what we know best, which is the topic of the strategic imperatives for business, the economic trends, and it's not meant to engage in a political sense, but we can still be out there, we can be convening conversation, and I think that's an important role that we play.
Yeah, and we see that partnership model also coming here at BMO, which is something we discussed with Kevin already, because it takes almost a village to make, progress on sustainability and make sure that you are able, to your point, not to force anything, but make sure that you have a menu of options that clients, depending on their needs, can take and go ahead. So, Amar, I also want to hear from you on innovation, but we are approaching time. So tell us about innovation, and at the same time also give us your closing remarks when it comes to if there's something you want to change in the sustainability landscape, what that will be.
Okay, I'll start with that one. I think what I would love to see change is for the market to price climate risks. Right, they're not quite priced, and I think Stefan, you probably liked me saying that, and I think that's something that we haven't seen quite enough of yet, and I think it will happen. It's just a matter of when. On innovation, I wish I had more time because we're doing so much on innovation. We have incentives for within our products for customers to invest in sustainable practices that align with our sustainable finance framework. One of the really cool things we're doing is supporting innovation farms. And these are farms across Canada that test new technology and assess its commercial viability. And then we support through both advisory work, through financing, through value creation, connecting with potential customers, and just the network. And, one example, one customer that wanted to replace their supplier from the US, and because FCC is so central and connected within the whole industry across Canada, within the same day, we found an alternative supplier of the same type of product from Quebec, and they proceeded to change their supplier. But the Innovation Farm network is really interesting because we have a growing venture capital investment arm that makes direct equity investments and also fund investments. And we use that as an area to fund seed, early stage, take on more risk, and also Series A, Series B, and C, and growth equity to support Canadian businesses that are driving innovation within agriculture, and to provide them with financing, with value creation, with really the opportunity to stand up and expand their operations, both in Canada and globally. And that's just one example. If I had more time, I'd dive
No, I love that. It almost deserves a separate workshop to talk about it. And it really shows, it's a perfect example of beyond banking, right? It's like initiatives that you are taking that are not traditional banking initiatives that really help that whole community to drive sustainability objectives forward. And not sustainability, even sustainability objectives, efficiency is making sure that if there is a risk, cross-border risk in this case, there is an alternative in Canada where you can do it and really manage the risk that you're facing.
And it addresses the trade challenges, right?
Yeah.
You're diversifying your market as well.
Exactly. Yeah. Thank you, Mar. Stefan, your closing remarks, and if you could change one thing in the current sustainability landscape, what will it be?
Can I take 30 seconds to just say what I think is the most important thing in the budget that came out,
Yes.
besides the taxonomy, which they don't call a taxonomy, they call a future business pathway, because taxonomy is such a charged term. I think the most important thing that came through in the budget, and I hope my legal colleague here will agree, is the proposals to changes to Bill C-59, where they're going to change the requirements for institutions to align with internationally recognized methodology and also the rights of actions by private parties. And we haven't talked about that, but I think that is going to really, hopefully, give institutions a bit of breathing room to be a bit freer to make their disclosures. One thing I'd like to see change is obviously from a prudential perspective is I wish we had longer time horizons in our thinking. I wish we looked beyond the next quarter, beyond next year's sustainability 137-page, glossy page report. I wish we looked decades down the road when we're developing policy to think about where should capital be allocated, how do we price these increasing physical risks that we're seeing. I really wish we had longer time horizon discussions. And that's that's the one thing I would wish for. And I want to leave with one last. I know I'm the dooms guy here today, but if my colleagues Brett, who's here, is doing a panel later. We did a deep dive on the residential mortgage underwriting practices of our banks, and there are trillions of dollars of collateral that are uninsured, will soon be uninsurable, and institutions do not know the adequacy of the coverage, which perils are covered or not. To me, these are huge blind spots for our system, right? And I just wish we paid more attention to things that are easily measurable now, right? So sorry for going on a bit too long.
No, thanks for helping us close on a positive note, Stefan.
It's the last time the regulator is coming.
No, now we all need to participate in the workshop just to make sure we are able to ask some follow-up questions, because I think that deserves, again, separate conversation, right? And I hope that what we are doing now with physical risk assessment and transition risk is just setting the stage for more long-term thinking when it comes to our risk management processes and portfolio management. So, Bill, closing remarks, and if you want one thing to change in the sustainability landscape, what that will be.
Okay, I'll be quick. I agree that the no longer needing to necessarily tie or find an internationally recognized methodology should be a big boon to clean tech and their ability to tell their story, because I think there aren't a lot of internationally recognized methodologies to talk about a non-commercialized technology and what it could possibly do. So that's a huge opportunity. One thing I would change, I would say to our Prime Minister to hurry up and get this transition and taxonomy or future business financing framework in place, because I think that's a huge opportunity for us in Canada.
Perfect. Thank you so much, everyone. Thank you, Michael. Thank you, Amar. Thank you, Bill. Thank you, Stefan. You will hear more about the federal budget, C-59 taxonomy in the next panel, where Daniel will be here and we'll talk more about financial reporting. Thank you, everyone.